It is hard to believe that we are entering the final month of the year, but for investors, that's typically a good thing because the month of December is typically one of the best performing months for stocks in general. Looking at the data dating back to 1928, the month of December has returned an average of 1.3%, making it the third best month of the year for stocks. In the past few weeks, we've gotten a bit of a shakeout, but the dips are starting to get bought, which I believe is setting us up for that typical solid month of December. But again, there's a few things that go on in December. We have some tax loss harvesting, so that doesn't mean that all of the selling is done. But on the back end, we typically have that Santa Claus rally. And I have a lot of confidence going into the month of December that we could end the year 2025 on a high note. As such, in today's video, we're going to be talking about 5 of the best stocks to consider buying for your portfolio in the month of December. So make sure you stay tuned throughout the entirety of today's video. It's going to be a good one. And before we dive in, show your appreciation for the videos by just simply clicking that like button down below. Subscribe to the channel, and let's jump into it. Hey everyone, Mark Roussin here, back for another video. As always, I'm a CPA and not a financial advisor, so please do not take this as financial advice. So let's jump straight into today's video, getting to those 5 of the best stocks to consider buying for your portfolio in the month of December, beginning with stock number 1, which is going to be Boeing, stock ticker BA. And with the stock under pressure in the past few weeks and month, Boeing is starting to look incredibly cheap. And for those of you that are long-term investors and can have the patience to get through some of these turbulent times, this is a company in the midst of a major turnaround. And the other thing to like is the fact that they operate in a duopoly. The company currently has a market cap of $142 billion. Over the past 12 months, shares are up 22%. However, over the past 3 months alone, shares have pulled back roughly 20%. The stock has had a nice bounce back over the past 12 months, but looking more short term, things have been a little bit more turbulent. And that's going to be part of the process with a company that is going through this massive turnaround. And I believe the returns looking out over the next 12, 24 months, this company has massive upside potential. Not only do they have a new leadership team, they have a renewed focus. And the orders are starting to pile up, which is going to start to generate more and more free cash flow like we saw the Boeing of old. Speaking of free cash flow, Boeing is a company that's been burning free cash flow for the past 6+ years. And 2026 is when we're expected to see a full year return to the green in terms of free cash flow. And based on that, the stock is getting little credit for a turnaround. As you can see here from this chart, analysts are expecting the company to generate free cash flow of $2.9 billion next year and $7.1 billion the following year in 2027. Again, there's a lot of reasons to be optimistic. That new leadership team and that renewed focus is a big one. But we're also seeing easing restrictions on that major 737 MAX. We're also seeing deliveries at the highest level we've seen in a number of years. And as I just mentioned a second ago, a company that's starting to turn the corner to positive free cash flow. You could see here the turnaround in year over year with revenues, operating margin, free cash flow all vastly improved from a year ago, and the first quarter of positive free cash flow in some time. EPS growth is also set to explode from negative $9.41 this year to a positive $2.59 per share in 2026, and then jumping even more to $6.02 in 2027. That is back-to-back years of more than 100% growth. Using those 27 estimates, shares of Boeing trade at just 31 times. That goes along with more than 100% growth in back-to-back years, which is incredible value. Again, you gotta stay patient though. Analysts are also upbeat, rating the stock a strong buy with an average 12-month price target of nearly $255 per share, implying 35% upside from current levels. When it comes to investing, you want to have the right tools available to make better investments. Better, more well-informed investments can lead to better returns. And the number one resource that I utilize is going to be Fiscal AI. It is a one-stop shop for all types of investors. And right now, Fiscal AI is running their biggest sale of the year through December 1st that will get you 30% off any of their paid subscriptions, so be sure to check out the top link in the description below. And that's going to lead us to stock number 2, which is going to be Micron Technology, stock ticker MU. You know, we can't go through a top stocks list without talking about at least one technology name. Today, it's going to be Micron. And if you go back to my top 6 AI stocks for 2025, a video that I put out 12 months ago, one of those 6 companies was Micron. And since that video has been released, shares of MU have climbed over 140%. Now, can I honestly sit here and say I was expecting 140% gains? No, but we'll take what we get. When it comes to Micron, they currently have a market cap of $258 billion. And as we just spoke about the 12-month performance, the year-to-date is even better, with shares of Micron up 170%. Now, how could a stock with performance like that, 12 months year-to-date, continue to go higher? And this is where a lot of investors go wrong. They let share price performance dictate their decision-making, and that's not how it should be. You have to be able to dive into the fundamentals of a business. This goes back to a story of many investors that I spoke to. When we were looking at their portfolio, they talked about selling out of NVIDIA. This was pre-split, when shares are around $800. And I walked through them, valuation on the company. After a big move from 400 to 800, shares of NVIDIA were actually cheaper that day than they were a year ago prior. And what did the stock do from that point forward? We saw it go from 800 to 1,000 to 1,200 plus. Just because the share price has gone up exponentially doesn't make it expensive. It's so important to lean on valuation to help steer your decision making, and that's where Fiscal AI is going to make your investing journey so much easier. When looking at the financials here from Fiscal AI, we can see that revenues for Micron are at an all-time high and growing for a second straight year. Operating margins are at 26.1%, very healthy. Only the year 2022 was higher. And when it comes to AI in general, a lot of what we hear about is the lack of capacity concerns. The demand is exponential, but one of the key clogs when we're talking about AI and semiconductor chips is memory. And a company that specializes and one of the largest here in the US in terms of memory chips is Micron Technology. Looking here, you can see analysts' EPS estimates moving forward. In 2026, analysts are expecting EPS of $17.13 per share, which would equate to more than 100% growth. And again, this is a stock that has grown 170% in 2025. And at those estimates, shares still only trade at a forward PE of 13.8 times, giving the stock a peg well below 1, and at that multiple, nearly half that of the greater market. A stock that has seen huge performance, but the fundamentals are growing just as fast, and you have a company right now that still looks cheap. Analysts are also upbeat in the stock, with a few increasing their price targets of late. Morgan Stanley named Micron its top AI stock, and they raised their price target to $338 per share, implying more than 40% upside. UBS has a $275 per share price target that was recently raised, implying more than 15% upside. And Rosenblatt raised their price target to $300, implying more than 25% upside in shares of Micron. And that leads us to stock number 3, which is going to be Duolingo, stock ticker DUOL. The first 2 stocks that we talked about, both Boeing as well as Micron, still have tons of upside. Duolingo is another one that I believe has massive upside. And very rarely do I say this, but this is one of those situations where I believe the stock market got this price completely wrong. But that's okay, because for long-term investors like myself, that creates opportunities. And when it comes to Duolingo, this is the smallest company we'll look at here today. They have a market cap just below $10 billion at $9 billion. But over the past 12 months, shares haven't been great, down 45%, with much of that coming in the past 3 months, where shares are down roughly 30%. Well, what in the world happened to cause a stock price to fall 30% in a matter of just 3 months? And the answer is solid earnings, if that makes any sense. When you look here, you can see the company's most recent financial results, where, again, they look pretty solid. Look at the growth figures year over year. Daily active users grew 36% to more than 50 million. Monthly active users grew 20% to more than 135 million. And paid users grew 34% to 11.5 million, with revenues and bookings increasing 41% and 33% respectively year over year. So where does the problem lie here? Because when you look at the results, it paints a very different picture. It's not like this is a company that's curling over. It's not like this is a company that's burning cash and operating at a negative or a loss. In fact, they're growing, and they're growing at a very healthy rate. Where the problem lied for investors was in the guidance and also some management commentary. Management noted in their guidance, when they actually increased their guidance, a shift on focusing more on investing for growth, something that they believe is a huge opportunity to build long-term shareholder value. This is a perfect example of investors getting nearsighted, looking at the short term rather than the long term, not seeing the forest through the trees. Looking here at this chart from Fiscal AI, it shows revenues, operating profit, and operating margin all moving up and up. Revenues at $946 million, operating profit over $100 million, and operating margins surpassing double digits at 11%. This is a fast-growing company, and a lot of the fears center around AI. AI taking this company completely out of business. But that's like saying AI is going to cause all universities out there to lower their prices, and that's simply not the case. In fact, Duolingo is utilizing AI to issue out more products. Will it have an impact? Absolutely. I believe it'll have an impact. But to the degree that we're seeing value cut off from this company in that short amount of period of time, I believe it's way overdone. In terms of valuation, right now is the cheapest you have ever been able to buy shares of Duolingo based on free cash flow, which their price to free cash flow currently sits at just 24 times. And analysts, they're also upbeat in the stock, continuing to rate it a strong buy with an average 12-month price target of nearly $283 per share, implying more than 45% upside from current levels. If you're interested in seeing my entire portfolio, stocks I'm buying or selling, then consider becoming an Edge Plus subscriber to my newsletter, The Stock Investor's Edge. We also have an Options Edge Plus subscription where you can see all of my option plays day in and day out. Right now, we're running our biggest sale of the year, our Black Friday sale through the end of this month, where you can get 30% off. Make sure you check out the link down in the description below. And that's going to lead us to the fourth stock on our list, which is going to be the Global X Cybersecurity ETF, stock ticker BUG. Now, some of you might be saying, Mark, this isn't an individual stock, it's an ETF. Yes, you're correct. In fact, the final two stocks we're going to look at are actually ETFs. So with BUG, I could have easily selected a cybersecurity individual stock name right here, but I chose to get a wide exposure. Why? Because the cybersecurity space in general has been under pressure here the past few weeks. And I believe instead of just trying to choose one winner, why not gain exposure to a wide range of names? And by investing in BUG, you get just that. There are things I don't like about BUG, and one of them is going to be the higher expense fee. But it's at the higher end of my range when it comes to one of my rules of investing, so we're going to let it fly. But thinking about into year end, and thinking about moving into 2026, one area I continue to want to have exposure to and build exposure to is going to be cybersecurity. Moving into 26, I want to continue to focus on quality. But one of the major themes for me, again, continues to be cybersecurity. If there's one area that businesses can't cut costs and can't cut corners, it's going to be cybersecurity. And that's going to be a benefit to a lot of the holdings found in BUG. When you invest in BUG, here's what you get in terms of exposure. Of course, it's all technology names, but the top 10 stocks consist of Fortinet, CrowdStrike, Checkpoint, Akamai, Zscaler, CyberArk, Palo Alto, Gen Digital, SentinelOne, and Trend Micro. Those top holdings make up 55% of the entire ETF, and in total the fund has 31 holdings. CrowdStrike, Palo Alto, Zscaler are not only some of the largest cybersecurity firms on the market today, they're among my favorite stocks in the market today when talking about cybersecurity. Over the past 12 months, shares of BUG are actually negative by 6%, and I believe this is providing a great opportunity heading into not only December, but also into 2026. Looking here at the 5-year chart, you can see the ETF is trading right in line with its long-term support line from late 2022, again pointing to a great entry point. Cybersecurity continues to be a key focal point for me moving forward into 2026. And that leads us to stock number 5, or ETF number 5, which is the iShares Bitcoin Trust ETF, stock ticker IBIT. Now, Bitcoin isn't something that I talk much about on this channel really ever, but when I see an opportunity, I want to share it with you folks. Over the years, I've heard a number of different things when it comes to Bitcoin, one being that it's digital gold. The other phrase I hear a lot is the fact on how it's not correlated with the S&P 500. However, if you look back over the past few years, it's actually been a leading indicator for the S&P 500. Although Bitcoin has underperformed, when I look at the 12-month chart, things look rather correlated. And in the past 12 months, it has actually been a precursor as to what was to come in the stock market. Bitcoin was the first mover higher back in April, and then it topped out and began its decline in late October, before the stock market started its decline in November. IBIT is a great way for retail investors that want to be, number one, hands-off, and number two, want to invest and gain exposure to the cryptocurrency, specifically Bitcoin. You don't have to worry about cold storage or storage in general. You can just invest in IBIT. Now I want to show you a quick clip on what Fundstrat's Tom Lee talked about recently when it comes to Bitcoin.
Sideline the idea of what, Bitcoin 150, 150,000 you were thinking before?
Well, I think it's still very likely that Bitcoin's going to be above 100,000 before year end, and maybe even above one to a new high. So Bitcoin makes its moves in 10 days and every year. I think some of those best days are still going to happen before year end.
Now, we must all know that Tom Lee is typically a very optimistic person. So make sure we take that with a grain of salt. But at the same time, looking back over the past few years, he's been correct a lot. So glass half full, glass half empty. But when it comes to wanting that cryptocurrency and wanting a hands-off approach, definitely take a second look at IBIT. And with that being said, there's our 5 stocks to consider buying for your portfolio in the month of December. You got 3 individual stocks and 2 ETFs, a wide range of different types of investments, and I would love to hear which is your favorite down in the comments below. And make sure you take advantage of both the Fiscal AI Black Friday sale that's going on right now, as well as the Stock Investor's Edge at my newsletter. All those links are down below, and if you found any value in this video, please show your appreciation by simply clicking that like button down below. I appreciate it, really helps with the growth of the channel, and we'll see you in the next one. Take care.